Welcome everybody to Wall Street Reporter's Discovery Day CEO interview series. We're introducing you to a brand new company, Stria Lithium. This is a company in the lithium space. Now, anybody that's alive knows that EVs, electric vehicles, are past the inflection point. It's not even at the inflection point. It's actually past the inflection point. We're seeing massive growth in the EV sector. The gas engine is basically it's going to be extinct in just a number of years. Now, what all these EVs need is batteries, right? They need batteries, they need energy metals, they need things like lithium. And we don't know who the winners are going to be in the EV space. Is it going to be Tesla? Is it going to be Ford? Is it going to be NIO? It doesn't matter. What we do know is that they all will need lithium, and Stria Lithium has an exciting project in Quebec, and here we're here to learn more about that. We're here to meet Dean Hanisch, the CEO. Dean, welcome to the program.
Thanks for having me. Appreciate it.
Dean, so you're in Canada. We can see there's a little bit of snow on the ground.
Yeah, there's lots of snow actually. It was a big snowfall year for us up here in Canada. I'm located in Ottawa right now, which is about maybe 10 hours from the project, 12 hours south of the project.
Oh, so okay. So it's you could get there pretty quickly. So Dean, so our audience, they're looking for stocks that have that multi-bagger upside potential. We've had many stocks in the tech sector that have had huge wins, and we've also the last two mining stocks we've had have had some significant wins. So what we want to know is what. Let's start off with what is Stria doing in the lithium space? Give us kind of the snapshot, then we'll drill into it so we can better understand kind of the risk-reward opportunity that Stria offers.
So I would say like the biggest thing is that Stria was fortunate. It had a project that went back to 2013. So they had a land package, and again, back then you could basically had your pick of the litter of any type of property. Nobody was really looking for lithium, right? Everybody was looking for gold in that location, in that region. And so we were just fortunate, the previous management had picked up this project, and it was like picking up waterfront property 200 years ago in Florida. So we had the property, but unfortunately for them, being too early is the same thing as being too late. So now we found ourselves with this great property that we picked up at an excellent price, and we look around us and we see all these other companies now that are very successful. We've got, you've got Siona Minerals, you have, the Whabouchi project with Nemaska Lithium, Critical Elements. So there's actual mining that's happening, and they're going to start producing, or and some of them are actually producing lithium already. So there's a bunch of exploration companies around, and now we find ourselves at ground zero with this fantastic property that we picked up, as I said, when it was very easy to pick up great property.
Okay, so a lot of investors, they may not, we're reaching a lot of new investors, so they want to have a way to play the EV boom, right? So I think one of the best ways to play the EV boom is on the actual the battery metals, the battery space. You need obviously lithium for that. And so I think let's talk a little bit about the importance of kind of the district, the neighborhood that you're in, right? So again, it's and the metaphor that you used about the waterfront property, I think is very it's very appropriate, because it's sort of like, again, in the sector, it's sort of like you're getting this magnificent waterfront property in let's say Malibu, right? Let's forget about Florida. Let's say Malibu, someplace where the weather is nice. Newport Beach, right? So you get again, you came in there when nobody was buying the lithium, right? 5 years ago, nobody cared about lithium. All of a sudden now, the prices have gone up, 20x or more in many cases, right? So you got this great location, and now all around you, the neighbors, they're starting to put up these multi-billion-dollar condos, $100 million estates. And that's all of a sudden, and so they're going into production. So it's validating that you're in the right location. Just for the sake of context, can you give us an idea of like some of the stocks that have done well in your exact neighborhood, just so people know that where you're at?
So I'd say like the big district right now is in Quebec, and specifically one of the best ones is in the James Bay Iou-Itzi region. That region you know, is home to, like I said, the Nemaskas, the Sayonas, you know, a lot of these critical elements. You've got a lot of projects up there. And then recently there's, you know, some companies you may have heard of, like Patriot Battery, Winsome Resources. I mean, these are stocks now that have 330 million market caps. Patriot is at 1.34 billion market cap, and they started at, you know, 20 cents, and now they're $14. And you know, Winsome's started around 30 cents, and they're at $2. So you really have to be in the right district and the right trend in order to find the lithium. So, you know, being surrounded by all of these companies that have found it and proven out resources, and some of them actually in production, is important that you're in the right space. So we're there.
Okay.
The other, yeah.
And so, you know, okay, so you're in the right location. I mean, some of your, okay, so basically some of your neighbors have had these, you know, moonshots in their stock because of the fundamentals, right? They've gone into production, you know, they've developed the resources. Let's talk about also the importance of, beyond just the specifics of where you're at, kind of like in terms of, I think the car companies, the governments, they all really are pushing for local production, right? They want, I mean, let's talk about a little bit of a snapshot of where lithium is produced and why, you know, the production of lithium in Canada is so important for the car companies, the manufacturers, and also the government in the US and Canada.
So yeah, and that's a good point, because that kind of touches home why I got involved. Because to me, looking at this, I found it to be a generational opportunity when you see, you know, first time where government is saying you have to, you know, take all of the cars off the road at a certain date, and they have to be electric vehicles. Well, you've got like 100 million cars in the USA each year, okay, being produced. You've got about 20 pounds of lithium going into it. So, you know, you could say, well, why not grab the lithium from other countries? But what you're seeing with the, you know, the Biden's Inflation Act, it's an opportunity for the US and for Canada to basically take back control of their supply chain. So they're putting initiatives in place where they're saying, we will support the exploration companies. We want to have our own battery plants here. We want to be able to, you know, produce a lot of these vehicles here and create jobs here. And in order to reach our goals of getting a certain amount of electric vehicles on the road, we can't have that being affected by a foreign supply chain that might not give it to us. So what you're seeing now is a lot of support, and I think that is really where, you know, I see the big opportunity, is that, you know, you're going to be supporting the critical minerals from North America, and they're not everywhere. Canada happens to have a lot of lithium. Our lithium mainly is found in pegmatite, so it's a hard rock lithium. Some of the other lithium deposits you see in Argentina, Chile, it's a brine lithium. So really, I think the biggest pendulum swing will be in the exploration companies, because they're first. So if you wanted to invest in something, you know, you've got to come in early. The government's in early. You rarely see government funding, you know, and giving grants and loans to both Canadian companies and American companies that are in exploration and mining to get to the next level. So there's a big non-dilutive portion of it. And I think that's what's really exciting, is that, you know, they're demanding that this happens, and they're willing to step in and fund it.
Now, in terms of, okay, so in terms of lithium, right? So there's, it comes in, I guess, what, there's different forms, right? You have the brine lithium, you have the hard rock lithium. What's the difference? I mean, as far as the market is concerned between the two.
So I would say that, you know, that's the two lithiums that you can get. The brine lithium, it's mainly where you find it. I think it's more in salts. It's one of those, if people have seen those big, huge, looks like a lake with brine, and then it takes years to evaporate, and then, you know, they do that. Whereas in North America, a lot of it, not all of it, but there's a lot of the lithium that's found in what is called spodumene. And spodumene is found in pegmatites, and basically it just means it's found in hard rock. So you have to crush it, separate it, and then separate the lithium.
Okay, so is it basically more consistent? I mean, in terms of, again, with the brine lithium? I think one of the issues is that, you know, they need it to evaporate, so they're basically put it out in the lake, and, you know, depending on the weather, the temperature, you know, it could have an effect on how long it takes to get to lithium. Is that, I mean, is that the way it works?
Yeah, so that's one of the way it works for sure. And I mean, it's unsightly a little bit as well. But I think more importantly, it's what type of lithium do we have? So if you have a government that's saying we're only going to support minerals that come from North America, and we're going to give out, rebates and be helping out manufacturers and car companies and rewarding them for using critical minerals that come from Canada or the United States or anywhere in North America, and we happen to have hard rock lithium, then I think that kind of trumps everything. That's where it's going to come from, because this is the type of lithium that we have. I mean, it's that we have, and Australia has it as well. But in North America, if you're going to take lithium, it's most likely going to come out of hard rock.
Dean, let's get into some details about the Pontax project, the lithium project that you have. If you can share some details, a little bit about the history of the project and why you and your partners are so excited about its potential.
Yeah, so the project that we have is called the Pontax Central, and it's basically a large pegmatite. And what happened was we drilled a number of holes, and every one of those holes had hit spodumene. So we were very encouraged by that. We did some holes in 2017, some in 2020. The results were consistent with the neighborhood and this type of geology. And so from there, we decided that perhaps what we should do is, find a partner who has experience, they understand pegmatites. And so we looked and we figured out that, the world's best explorers, let's say, of lithium in hard rock are located in Western Australia. So we did a deal with a Western Australian company and brought them in. Basically, there's 700 meters of strike so far and continuing. We've got a number of holes that have been drilled into that with the fall program. We also did a winter program that our partners had completed. And so we're excited about it because it never really got enough drilling and had the attention to the geology as required. So every hole that we hit was great, but they were shallow holes because we weren't sure. And now that we hit on those shallow holes and we have the partner, we're going to be drilling underneath those existing shallow holes at depth to see what we're going to come up with. And we have 3 drill rigs, presently drilling, and we should have a lot of assays coming back from the fall program where they drilled an additional 14 holes, and we've only released 2 of those. So the project has a lot of merit. We're very excited. Our partners are extremely excited about the project to get these drill results back. And one of the things that I would say the most exciting part is that we're only drilling the actual major outcrop pegmatite on this program. But really what's happening is if you look at some of the other companies that have hit it out of the ballpark, they were getting their biggest intervals and their best intersections when they drilled off of that. And so we haven't even started to do that. But with the funding in place and the drill program, we're super excited to see what's going to come out.
Okay, so Dean, let's break it down for a layman audience, people who don't know anything about drilling. So here's what we know so far, right? You're in the right neighborhood, right? You got, projects. I mean, you have stocks that have been exploding based on, going into production based on, the lithium that they have. Now, what validates, I believe, and we're going to dive into the details of what you have, the history of the project, but to me, kind of what validates that what you have has some upside potential is that, you have a partner that came in and is putting up real money, right? So these guys, Cygnus, so they have experience in this type of, this kind of is this pegmatite, right? This is their specialty. These guys have some track record. And how much are they putting up basically to have a partnership in your project?
So we did an earn-in with Cygnus, and basically the way that it works is that they would give us $3 million. They've already given us $1 million. They'd give us $3 million. They would spend $4 million in exploration, which they're plowing through pretty aggressively. They had 18 months, but it's been about 6 or 7, 8 months, and they're already going through. As I said, they have 3 drill rigs going. And okay. I think that's kind of the Australian way. They're very aggressive about drilling, and that's kind of what you need in this type of a deposit. And then they can earn another 19% by giving us another $3 million and spending another $6 million on the project. So from them, they're hoping to have something out by June, July. to have an actual resource estimate of some sort. So we're excited because
July. So
right.
So the catalyst is basically that. So that's the big catalyst. June, July. We're in March. We're in almost mid March. So we're a couple of months away from potentially a significant catalyst.
Yeah, I would say so, because in this region, it's actually the easiest time to drill is when it's winter and it's cold. So you could see outside, and this isn't even nearly as cold as it is up there, but it's important for the snow and the cold in order to build a winter road. So when you have the winter road, you can just drive in, because we're extremely close to the main road, which is one of the reasons they picked it way back when. And so, yeah, we have 3 drill rigs that came in by land. And so the window of the 2 or 3 months of drilling is very exciting, because we're going to have a lot of results coming back. And that's kind of what you see, you know, for the excitement for an investor, is to actually see that there's drilling and things are happening, and these guys are extremely aggressive, and we're happy about that.
Okay. So again, like, I mean, I'm not an expert in mining, but, you know, from what I do understand is that, you know, look, nobody puts up $4 million unless they see some real potential, right? I mean, you know, it's not like in the tech space where everybody's throwing around billions or whatever. In the resource space, you know, $4 million for a project, again, this is all speculative, right? At the end of the day, mining, we have some data, we have a little bit of data, but it's like biotech. It's really speculative. We don't know until, you know, again, the drill bits hits the ground, the assays come back. We don't know what you have, right? So, but these guys, obviously, they see something of significance if they're putting up $4 million. That's, to me, that's the takeaway.
Yeah, and I would say that this group is the same group that's behind Bellevue Gold in Australia, and it's going to be one of the lowest cost producing gold mines in Australia, and they brought that from inception up to 1.4 billion market cap. So for us, you know, we were sold on their background, because just like the investors, as a company, we're also hedging our bets. Like, it is speculative, but it takes a lot of risk out if you have people who've done it before and have done it well. And so for us, it made a lot of sense that, you know, they're well funded. They have like $15 million in the bank. They've been aggressively drilling. You know, they're blowing through the 4 million. They gave us $1 million up front. And for them to do that with their experience and their skill set was very comforting for us, because they know what they're doing. They obviously see a lot of value.
Okay. So, you know, the story is coming together. Again, I'm not a mining expert. I kind of, you know, understand a little bit. But what I do understand here is, okay, so these guys, Cygnus, they took another project from basically zero to over $1 billion valuation, this gold project.
Yeah, some of the people behind it, they brought it from inception to, it's like 1.4 billion, and they took it from exploration right into, where any day now, into production. So I think that's important. A lot of times you have a lot of explorers, and I mean, people who have invested in mining, I mean, they've seen it, including myself. You go out and you explore, and they find some, you know, find a little bit here and there, and they continue, and they can go and go and go for years later. But really what you need is somebody that has the ability to do the transition, right? From exploration, how to build a resource, and how to put it to the next level. And so for us, we're piggybacking off their previous success and skill sets, because our skill set is that we're going to be looking at other projects on the ground. We're going to be looking to do some work. We're funded. We have $3 million in the bank. We'll be receiving a couple $1 million worth of cash or shares from Cygnus any day. And we really want to go out and we have our hands in talking to other people on the ground to find some other projects and do the same thing. So this model works for kind of de-risking for us, but at the same time, you know, we're here, we have critical minerals that, you know, they're saying by 2030, by 2035. So we got a 10, 15-year run rate to get there. And for us, we want to just, you know, accumulate as much as we can and give our shareholders as much opportunity to participate in these different projects, and let people smarter than us and better than us at mining who've done it do the real work.
Okay, so it's interesting, going back to your metaphor about the waterfront property. So, you know, this is basically like, you know, you're not a hotel operator, right? You're basically a guy who knows how to find good locations. So you found this great location in Palm Beach, you got the land, and then you make a deal with, you know, the Ritz-Carlton, where, you know, essentially you're going to lease them the land where they're going to build the hotel on, and you're going to share in, all the revenues from that hotel in perpetuity. And they're the experts. I mean, they know how to do the room service. They know how to make beautiful rooms, how to create that, the great pool and all that. Essentially, all you got to do is, at this point, kick back and relax. But really, you're not going to kick back and relax. You're on to find the next property that you can bring the next hotel into. Is that the idea?
Yeah, I would say that. I mean, I think we've all been there where we've looked over at a barren piece of land of some little motel in Miami beside all these big guys, right? And they just happen to have it for whatever reason from way back when, and everything built up around them. So that's essentially us. But we're kind of going a step further because for us, it's important, for a stock to go somewhere to have a tight float, right? So people would say, well, you're going to end up with less of the project as you go. But the beauty for us is that we're not spending, we're keeping our money tight, and we have like 25 million shares outstanding. So we're a very tight structure. A little bit will go a long way. And in the end, it's better to, hang your hat and hold on to the reins of a winning horse to take you where you need to go. And the only difference would be is that we're looking for other properties that we can do the same. So our skill will be on the ground. We have good connections to be able to pick up some other ground in other places. And we'll do some reconnaissance work on it, and we'll continue to do this model. And I think that's the best thing for us is to know who you are and what your capabilities are.
So the market cap right now is based on the current price, roughly around $5 million, $6 million the current valuation, right? Some of your neighbors are trading at huge multiples of that. What are let's talk about the comps. Like, what's different? Like, what's the difference between what you have and what some of the other guys around you have? Why are they trading, significantly higher than you are? Like, what's the difference between their project and your the stage of development, or what? From a layman's perspective.
Yeah, I would say through a layman's perspective is, again, like we've only, started drilling, so it's at the beginning. And so there's a lot of assays still to come back. And I think it's just a matter of it's there, we're hitting it. It's just when you hit that interval that's a little bit bigger, a little bit longer, as soon as you hit those intervals, then that's where you really see the catalyst, and you need to spend money and you need to be aggressive. And that's what our partners are doing. And if you look at your companies, like I mentioned earlier, like Patriot Battery or Winsome Resources, as soon as they hit that one interval, then the stock just, skyrocketed and continues to. So I think it's that's really there's always a gamble in anything, but the educated gamble is on the skill sets of your operator and that they're funded to be able to do it. So it's really about, do you have enough money to spend, and are you going to put the money into the ground? And we have that. So I think that's the catalyst for us, is that we have both of those in place.
Okay, so they're going to be spending, Cygnus is going to be spending $4 million on this project over the next almost the next roughly year, and they're halfway through. Like, what's
they've already, I would say that they're very close to eclipsing the 4 million already. So they had 18 months, but they decided, it's amazing. You see some of these other companies, they have one drill rig going. Okay, some have two. Cygnus has three, because again, I think it's the Australians have something unique about them, is that they understand that
time is money. They know time is money. I appreciate that, by the way. I appreciate, companies when there's a sense of urgency, because a lot of these guys, they think, oh, it's forever. Like, no, the time is money, especially, for investors. Like, I want to see companies putting out, the winners who have had all those stocks that took off 10x or more. It's because, they understood time is money, and, the news, the milestones all happened in a compressed window. Like, we don't want to see these results drag out over 5 years. We want to see it happen in 3 months or 4 months. So I'm getting the sense that these guys are basically have 3 drill rigs on the ground drilling, and we're going to be seeing results. When are we going to be seeing these drill results, by the way?
Yeah, I think the results will be coming out anytime. I mean, they should be coming back shortly. We had a fall program. There's 12 assays that we're still waiting for out of 14 just from the fall program, which is complete. And then they've had these 3 drill rigs that we brought in from the winter road that have just been going, nonstop. So we should have drill results right up for another 4, 5, 6 months. And, I'm an investor. So, I started off in this company being an investor. I have experience in helping a gold mining company get sold in the past. But really, like as an investor, I want to see momentum. So, you know, it's
Yes,
nothing worse.
thank you. I appreciate that. We're on the same page.
Yeah, it's like I see companies I've invested in, and I feel it's almost like a vehicle going up, you know, a mountain, and then they stop at some point halfway, and there's no drilling, and their stock price goes up, and then it creeps back, it creeps back, it creeps back. They get back to where they were, and then they put some gas in and start it up again. But what I like about these guys is that I think that, you know, you really need to just go out, have the money, have the, you know, the gumption to just go out and drill and get a resource going and continue it and follow it up. And I think that's what we're excited about, is because we want to see where are we going with this, how fast is it going to go, and then from that, you know, there's just a continuation that builds. So as you get drill results, and if you like what you come, you just keep going and going and going. And you see that with the Australian companies. You know, a lot of times you'll see they just keep drilling and drilling and drilling until they run out of, you know, of resource that they don't see. So I think it's exciting for us, because the Canadian market generally they're a lot more conservative, but I don't think that's the way to go about lithium. We got a window, the government's behind it. You know, there's a mandated legislated demand that is there. So there's a window, you got to hit the window, and that's what we want for our shareholders and for ourselves. We want to hit the window hard and have lots of results and just continuation, because that's what it's going to take to be one of the leaders in this area. Is you have to be aggressive. We don't want to be sitting here in 5 years still mucking around with you know, light drilling.
Right. Okay. So bottom line is this: you're in the right neighborhood. You got the right partner that's capitalized. They got the money to do it. Right. They're spending $4 million, and they're going about it in an aggressive way where there's momentum. So in other words, anybody who invests in the stock, you know, almost like, look, this is it's almost like a binary bet in a way. Look, they're going to see either it's going to be a multi-bagger or it's going to be zero. I mean, I'm not saying it's zero, but you know, they're going to see something very quickly. It's not going to be something that's going to drag on for years, you know, going nowhere. They can either see something very big or nothing at all. Is that right?
Yeah, and I mean, what I would say is that, you know, I'm not here to promote it, that, you know, you generally in that way, but the right way to do it just happens to be the way that shareholders as well like to see. I mean, if you think you have something, you know, if you have a gold deposit and you're chasing a vein, well, you move to the left, oh, you missed it. You move to the right, oh, there's a little bit there, and you're trying to chase a vein. We're not chasing veins here. Okay, here's this massive piece of rock, pegmatite, sticking out of the ground. That's your first indication. If there's spodumene in that, which there has been, you drill it. And then once you know that, you know it came from somewhere. It had to come from somewhere. It didn't drop out of the sky, right? So I'm not a geologist, but it means you need to take, it's just money and drill holes. And you have to have those two, and you have to have the gumption to go for it. And that's what we have. And that's why I'm excited about, you know, being on board with the company and why we chose them. And I think we chose the right partner, because that's what it takes. It's not rocket science. It's money and drill holes. You know, if you could drill 1 million holes in all over the earth, you'd find everything, right? But it costs money to drill. So you need to have the money.
So okay, how big is the project? Like, how many acres do you have there?
Oh, I mean, the project, it has a strike of 10 kilometers. It's long. It hasn't even been tested for all the other parts. So like the obvious one was this strike that you can see. So far they're at 700 meters of strike. And to give you an example, if you hit 1,000 meters of strike, you know, it's kind of like, depending on the width, you get to like 1 million, 10 million or 12 million tons. And just as an example for the people that are watching, you know, this is just off the cuff, but what I see is that you'll see for every 10 million tons of lithium that you see, they're getting roughly about $100 million market cap. So it's not perfect, but I mean, if you kind of look and see, okay, this one has 20 million, they're at about 200 million. So for us, I mean, you know, if we can get to that 10 million, which is kind of like the base, that's enough to just go out and mine. So it's not, it doesn't need to be bigger, but you've got a massive property with all these pegmatite outcrops all over the place. I mean, you could just spend, you know, a number of years just finding different pegmatites on the property and drilling them. And the larger it gets and the more metric tons you get, the better it's going to be. And you just basically can look at that. So if you reach your 20, 30, yeah, you're looking at 300 million if you're at 30 million metric tons. So it's the risk reward is there. So if you spend 4 million and you're able to do 10 million metric tons, well, you know, there's your difference between the two, right, as far as market cap.
Okay, so now, okay, and again to recap, once Cygnus is done with their program, once they've invested the 4 million, how much of the project, what's going to be the split once they're done with the 4 million?
So they're pretty well spent the 4 million, as I said. Their split would be they'd end up owning 51%. They would owe us $2 million in shares or in dollars. You know, which is at our discretion. I mean, I think we're pretty excited to take their shares, to be honest. But what it does for us is that would mean that we'd have, you know, another, let's say, $2 million in the bank to go with our roughly $3 million. So we're well capped up without any dilution. But they would own 51%. If they want to take it to the next step, to 70% for 19%, they're going to give us another $3 million in cash or shares, and they'll spend another 6 million.
Okay,
and then after
but they're not going to do that unless they get to this resource. So I'm assuming basically that the goal here is, you know, they want to basically develop, you know, get these drills going and get to a resource of at least, you know, 10 million tons of lithium. They want to basically be able to show a resource of 10 million tons of lithium by what, the summer, right? Is that the idea?
Yeah, I mean, I would think that that's close. I mean, they might have to do some more drilling to get there, right? Because the 4 million is just a number that we did a deal on. But yeah, I think they're definitely, I mean, with 4 million plus another 6 million, yeah, we'll see where they are. But you'll definitely have a good idea of what they're getting to from after this drill program.
Okay, right. So basically, okay, so what this really means is, let's say we go through these numbers, right? You know, 100 million valuation that we're seeing in the market based on 10 million tons of lithium. So really, Stria's share would be roughly 50 million. In other words, in theory, again, we're not making any projections or whatever, but if we're able to develop a resource of 10 million tons of lithium, you know, the value of Stria should be roughly 50 million plus. Maybe more based on, again, because the market always extrapolates. So if you get some, you know, like we see all the time, like if you get some really positive drill results back to back, we see a couple of, you know, positive news stories back to back in a period of, you know, a month, you know, the market can really extrapolate, you know, to a great degree. So, and then at that point, I guess they would make a decision. Okay, are they going to? Do they like what they see? Are they going to, you know, spend another couple of $1 million and maybe take it to, I don't know, 200 million? I mean, excuse me, to you know, 20 or 30 million tons, right? Obviously, you'll be diluted, but you'll have, you know, a small piece of something very valuable.
Yeah, I think that's the key. I mean, and that's why one of the reasons, you know, for them, I would think that they will look and assess what they have as far as a resource. They're also, you know, not just a resource, because they're going to be going out and doing some step out drilling and see what happens there, and they'll learn a lot more from the project. But I mean, if they go through the first part, that's a very good indication, right, for them. I mean, if they end up completing it and taking their 51%, it's great for us. And I think that, again, the non-dilutive nature, you know, for us is the makeup and makes up a lot of that space in between. And it's better to own, you know, less of something that's a lot bigger than owning the whole thing and not being able to drill it out. So again, back to our 25 million shares outstanding, like, we're a good play.
Yeah. Okay. So basically, the company doesn't need to raise any money. The project is funded, and you have experts. That's even more important. That these guys really are experts in this type of geology, and they have a track record, which is important. So I think that is, you know, it's an interesting consideration. Dean, you know, you started talking a little bit about your background, but, you know, tell our audience, like, kind of, you know, a little bit about you know, your kind of backstory and again, how you got involved with Stria.
Yeah, so my background is in helping out, you know, some public companies get to the next level. I've been involved in a number of different companies from inception to sale. So generally more about building something up and selling it. Was in the consulting space and some tech space. I helped the company Paramount Gold in the past sell to Core Mining, which was a Mexican asset of gold and silver. And so, the experience is more or less in real business. I'm not specifically a mining person. I started off because I invested in Stria Lithium. Our chairman is an extremely successful, astute business person in a number of different industries. And so I came aboard because, again, I believe that it's a generational opportunity. It's never going to happen again. There's a lot of money to be made, I think, in general with critical minerals. I'm not saying specifically with Stria, but you have a lot of critical minerals needed. You have a government that wants only local critical minerals. And so that's why I came aboard, because I think, again, this is going to happen once. It's never happened before where you're told you have to get rid of your vehicle and get and switch over to a new technology and vehicle. So the opportunity is there.
Dean, in addition to the geology, can you explain to our audience why the infrastructure is so important and why it makes this a compelling project?
Yeah, so one of the reasons they chose this project back in 2013, they had gone throughout Quebec, and there was other places to go that had great outcroppings and good geology. But the key was to be close to the James Bay Highway, the road. I mean, it's a very rural area, it's remote. And so they were looking to make sure that they were close to electricity and to the road. So in the case of lithium, I mean, again, like if you can get to a certain level and say it's 10 million metric tons, that's enough if you can take it out and bring it to Matagami, to where the rail station is. So the closer you are to that, the more important it is, because in this type of infrastructure, and if you're looking at extracting and selling lithium, whether it be in ore, what have you, you have to get it there. And 70%, say 50 to 70 to even up to 80% is haulage. So that's something that most investors aren't aware of. They see great results, huge intervals, and they get excited. But at the end of the day, it's like any other business. The business has to make money. And if you have to haul something 16 hours or 8 hours away, as opposed to 2 hours, it makes a big difference in not only your CapEx, but more importantly, in your operating costs. And if your operating costs are over 50% just hauling it, then you got to give yourself the best chance by getting the best geology that's close to where you need to bring it. And for us, we're very fortunate, to be able to, if we have to go 30 kilometers to hit the main road, that's great. I mean, there's other projects I see, they're 500-600 kilometers from hitting a main road. Okay,
so that's, so the infrastructure is a key aspect of this.
And the electricity as well, sorry.
Yeah,
so we have electricity at the project adjacent and a mine close by that we could bring in electricity from, because again, that's the next biggest cost associated with that. And it affects your CapEx and it affects your operating costs. And Quebec is the cheapest, I would say, cheapest, the least expensive electricity in North America. Almost, I think there might be one other one in Louisiana, but otherwise, definitely it's the lowest cost in Canada.
Okay, and it's obviously, Quebec, they're very mining friendly. I think they still give you that, what is it, that 50%, whatever you spend, they match or something. They still do that?
Yeah, they have the flow through program, which is phenomenal, which a lot of companies take advantage of. You can also use hard dollars, and even for hard dollars, if you're spending on the ground in hard dollars, you get a kickback that really it's going to cost you about 56 cents on the dollar. So that's a big discount. So Quebec is definitely mining friendly. They've got all the programs in place, so it's an excellent place to actually.
So there's really multiple factors that make this exciting. You got great neighborhood, right? You got some tremendous value being created right there. We've seen some of the results. Some huge wins in these stocks. Obviously, it's very mining friendly. You got great infrastructure. You have a great partner who has a track record. That really validates the project, that these guys who know, they really know mining, they've created some big wins, and they're putting $4 million into this, and they're doing it aggressively, which is really important, because that means that we could see something very quickly. We're not going to have to sit around for 3 years with this. I mean, this is not a stock. Basically, I hate to say this is not a stock for like long-term investors. This is something where we're going to see something within 6 months, and maybe it turns out to be hey, could be, who knows, but we're going to see we could see something big within 6 months. That's the takeaway, right?
Yeah, I mean, the takeaway is that they're drilling and they're putting a lot of drill holes in, so there's going to be a lot of news flow back. I mean, obviously, we have to see those holes have to hit the numbers that we're looking for and stay consistent, and hopefully also drill outside of the main outcrop and see where we hit as well. But yeah, it's definitely you're going to see press releases, you're going to see news. It's not a we're not sitting back, and these guys are definitely have been sandbagging, and I don't think sandbagging is the right word, but I would say they have assays, and because there's so much drilling going on in Quebec, and there's so many companies that are doing very well with lithium, and some of the companies that are going into production, the laboratories are inundated with a lot of assays.
Right.
We're waiting for those. So from fall, I mean, we're still getting 12 coming back. We've got 3 drill rigs. So I would say that, thankfully we have the drill results from the fall that they started coming back, and then, it's going to be a lot of results and assays coming back when you have 3 drill rigs on the ground.
Okay, so we could be inundated with news, which is very important. News flow. When can we start when can we start seeing that coming in? What can
I think, yeah, I mean, it's hard for me to say exactly because it's in the hands of the laboratory, but there's definitely a lot of holes sitting at the lab. Let's put it that way. And we should expect, based on what we were given before, we got 2 of them back that showed that they hit at depth. So there was mineralization at depth, which was a big thing for us.
Okay.
And so, again, like, they should be coming out any day, but it's very busy up there. There's a lot happening, and so there's a lot of drill holes, and a lot of the laboratories seem to be kind of trying to keep up.
Okay, when you say literally any day, I mean you mean like literally, like basically it's could be next week or the week after. We could see a whole stack of these things coming out back to back. I mean, just as they get these, as you come up in line.
Yeah, as they come in, they're going to be released. So there's a lot there, and so I would assume in the next couple of weeks. I'm always hesitant, since it's out of my hands, to say exactly when they're coming, but we're hopeful, and we should, we think we'll be getting them within the next couple of weeks. Start getting them in the next couple of weeks, and we should have like a decent flow after that continually.
Okay. So I mean, look, this is for anybody who's interested in the resource space. Again, this is who has that speculative mindset. I mean, this is very compelling, because like right now there's you're placing your bet. You just have to sit back with the popcorn and wait for the news flow to come in. And of course there's going to be more drill, so it's going to be a continuous pipeline of news in the months ahead, because whatever they're drilling now, I mean, you're not going to get those assays for 4 or 5 months. Maybe.
Well, they say they're 4 to 6 weeks, behind, but again, like, we have some from November, so there should be a steady flow. And I mean, everyone out there, right? Like, if you're investing in, a junior exploration company, there's always that element of risk, and even for us. But our gamble is that we're conserving our money. Somebody else is spending the money. We have a tight float, and we picked what we believe to be a very intelligent, experienced partner to do it. And we're in the right area, surrounded by others who have found it. And we got our property so early, and was one of the ones that were picked after going throughout Quebec. They picked this one on purpose at a time when nobody was interested. So that's kind of the gamble. And we're, a few intervals or intersections away. If you look at some of the other companies, and they've flown. And for now, we're going to sit back and look at what comes in. And I think we're in a good stead to see over the next 4 or 5 months, we should have steady news flow, and that'll tell the tale.
Okay, Dean, let's wrap up. in your opinion, what are the top 3 reasons why investors, should consider Stria today?
Well, again, just as a recap, I would say the property itself was chosen in 2013, which is important because it's a lot more difficult to find good property now that things have taken off. So we have a large land package. We're in the right area. We have an excellent partner who is, they're very well funded and very aggressive at going forward and drilling. And I think that, coupled with the fact that you've got governments that are giving out grants and loans and supporting, for once, their exploration companies, which is very unusual. The government's way far out in advance almost of anyone, and really doing everything that they can do to make sure that they meet their legislative directives. So
Yeah,
those are very good points.
And of course we got the mega trend, the EV mega trend, where the lithium is a key component. I mean, it's a key component of this mega trend, this generational theme that we're seeing with the explosion in electric vehicles. Okay, Dean, so we're going to come back to you in about a week. We'll go through the whole presentation. It'll be a live stream. So hopefully we'll have some great audience questions. We usually get a lot of technical questions because we have a lot of mining people in the audience. So that should be very exciting. So Dean, thank you, and we'll catch up with you next week with a live stream.
I appreciate it. Thanks for having me on your show.